Welcome to our channel, where we bring you insights into the world of finance, technology, and everything in between. Before we dive into the video, don't forget to like our video and subscribe to our channel for more insightful content. Today, we're going to talk about the future, but not the distant, sci-fi kind. We're talking about the immediate future, the one that's already unfolding around us, impacting our lives and our investment strategies. So, buckle up as we guide you through what's to come and how you can prepare for it. Because the future is not something you just step into, it's something you shape with your actions today. Remember, the future is not a distant reality, it's the result of the decisions we make now. So let's get started, and remember, the future is now. Have you considered your investment strategies for 2024? As we stand on the cusp of a new year, it's crucial to look forward. The economic landscape is not what it used to be. It's evolving, changing, and being reshaped by forces we've never seen before. From the rise of new technologies to shifting global dynamics, the future is not just knocking on the door, it's here, right now. In this exciting but challenging time, staying ahead is not just a fancy catchphrase, it's a necessity. Investment strategies that worked in the past may not yield the same results in 2024. The game has changed, and so must our approach. Innovation is no longer confined to the realms of science and technology. It has seeped into the world of finance, bringing with it a wealth of new opportunities. As we venture into 2024, it's time we embrace these innovative approaches to investing. We're talking about strategies that go beyond the traditional, that dare to be different, and that have the potential to reap significant returns in the coming years. This is not just about making money. It's about understanding the forces shaping our world and using them to our advantage. It's about being proactive, not reactive. It's about seeing the potential in the new and unfamiliar, rather than clinging to the old and comfortable. The world of investing is becoming more complex, but with complexity comes opportunity. There are new markets to explore, new sectors to delve into, and new trends to capitalize on. The future is not something we have to fear. It's something we can harness. So as we stand on the brink of 2024, let's not just step into the future. Let's seize it. Let's not just adapt to change. Let's drive it. Let's not just survive in this new economic landscape. Let's thrive in it. This is the dawn of a new era in investing. It's time to think ahead and stay ahead. The future is now. Are your investments diversified beyond traditional assets? In the evolving world of finance, it's crucial to consider expanding your portfolio beyond the usual stocks and bonds. The year 2024 presents a myriad of alternative investment opportunities waiting to be explored. Let's dive a little deeper, shall we? One such opportunity is real estate crowdfunding. This innovative approach allows you to invest in real estate projects alongside other investors, spreading out the risk and offering potentially high returns. It's like being a part of a real estate tycoon's empire without the hassle of managing properties. Moving on, we have peer-to-peer lending platforms. These digital marketplaces connect borrowers with investors ready to fund their loans. It's a win-win situation, really. Borrowers get access to funding, and you, the investor, can earn interest much higher than traditional savings accounts. Now, let's not forget about the timeless allure of commodities. Gold and silver, in particular, have been stalwarts of wealth preservation for centuries. Their value tends to increase during economic downturns, making them a great hedge against inflation and market volatility. But why should we consider these alternative assets? Well, the answer lies in the power of diversification. By spreading your investments across different types of assets, you reduce the risk of your entire portfolio taking a hit should one asset class perform poorly. It's like not putting all your eggs in one basket, financially speaking. Moreover, diversification can enhance your overall portfolio performance. Each asset class carries its unique risks and rewards, and they often don't move in the same direction at the same time. So while some of your investments might be down, others could be up, smoothing out the overall return on your portfolio. In conclusion, diversification is more than just an investment strategy. It's a necessity, a way to safeguard your wealth and maximize your returns in this rapidly changing economic landscape. So are you ready to go beyond traditional assets? Because remember, diversification is not just a strategy, it's a necessity. Before we move on to the next exciting chapter of our journey, let's take a brief moment to pause and reflect. Are you finding this video helpful? Are the insights and strategies we're sharing opening new windows of opportunity for you? If so, we'd love for you to engage with us. Please take a moment to hit the like button and subscribe to our channel if you haven't already. This simple act of appreciation helps us continue to bring you valuable content like this. Plus, subscribing means you won't miss out on our future videos. We have so much more to share with you. Now let's get back to our exploration of investment strategies. Buckle up, because we're about to dive into the world of technological disruption and the unique opportunities it presents. Are you ready to embrace the wave of technological disruption? It's a question that's becoming increasingly relevant as we navigate through the 21st century. Technological disruption is not just about new gadgets or apps. It's about fundamental shifts in the way we live, work, and even think. It's about the emergence of new industries that are shaking up traditional sectors, creating new investment opportunities that were previously unimaginable. Take artificial intelligence, for example. It's no longer a distant sci-fi concept, but a tangible reality that's transforming sectors from healthcare to finance. AI is driving efficiencies, enabling new business models, and opening up a world of investment possibilities. Companies like OpenAI and DeepMind are at the forefront of this AI revolution, developing technologies that are set to disrupt various industries. Then there's biotechnology, a field that's pushing the boundaries of what's possible in medicine and health. Innovative companies in this sector are working on breakthrough therapies that could revolutionize patient care and offer significant growth potential for investors. Companies like CRISPR Therapeutics and Moderna are leading the way in this space, promising exciting developments in gene editing and mRNA technology. Renewable energy is another sector ripe for disruption. As the world grapples with climate change, the shift towards sustainable energy sources is accelerating. Companies focusing on wind, solar, and other renewable technologies are not just contributing to a greener future, but also offer attractive investment opportunities. And let's not forget about blockchain technology. Beyond the buzz of cryptocurrencies, blockchain's potential to disrupt industries ranging from finance to supply chain management is immense. Companies like Chainlink and Ethereum are paving the way for a decentralized future, offering unique investment opportunities in the process. ETFs, or exchange-traded funds like ARK Innovation ETF and Global X Robotics and Artificial Intelligence ETF, are some of the ways investors can gain exposure to these disruptive technologies. These funds offer a diversified portfolio of companies leading the charge in technological disruption. In the face of disruption, opportunity arises. So as we look ahead, embracing technological disruption isn't just about keeping up with the times. It's about seizing the opportunities that these pioneering technologies present for the savvy investor. Are your investments aligned with your values? This question becomes increasingly relevant as we see the rise of environmental, social, and governance investing, also known as ESG investing. This approach to investing has been gaining traction, and it's not just about feeling good about where your money goes. It's about acknowledging that the companies who take these factors seriously are often better positioned for long-term success. But what exactly is ESG investing? It's an approach that considers a company's environmental impact, its social responsibility, and the quality of its corporate governance. Environmental factors might include a company's carbon footprint or waste management practices. Social factors look at how a company treats its employees, its stance on human rights, and its impact on the local community. Governance factors consider things like board diversity, executive compensation, and business ethics. It's a broad spectrum, and it allows investors to align their portfolios with their values. However, it's essential to note that ESG investing isn't about sacrificing returns for principles. In fact, numerous studies have shown that companies with strong ESG practices often outperform their peers in the long run. Now, how can you incorporate ESG into your own investment strategy? There are several ways to do this. One is through ESG-focused funds. These are investment funds that specifically target companies with strong ESG practices. Another avenue is green bonds. These are bonds issued by companies or governments for funding environmentally friendly projects. Then there's impact investing. This goes a step beyond ESG investing by actively seeking to create positive social or environmental impact alongside financial returns. It's not just about avoiding harm, it's about contributing to positive change. In conclusion, ESG investing offers a way to align your investments with your values without compromising on returns. It represents a shift in how we think about investing, from purely financial considerations to a more holistic view of what it means to be a successful company. When values and returns align, the result is a powerful investment strategy. Are you conducting thorough due diligence before making investment decisions? This is a question every investor should ask themselves. Due diligence is a critical step in the investment process, one that can mean the difference between success and failure. The importance of risk management cannot be overstated. It's not just about maximizing returns, it's also about minimizing potential losses. This involves assessing the risk associated with each investment opportunity. Is the potential return worth the level of risk? Are there any red flags that could indicate a risky investment? These are questions that need to be answered. Conducting thorough due diligence is the key to answering these questions. This involves in-depth research into the investment opportunity. It's about understanding the business or asset you're investing in, the industry it operates in, and the broader economic environment. It's about looking at the financials, understanding the business model, and assessing the management team. But it's not just about the numbers. Due diligence also involves evaluating risk factors that may not be immediately apparent. This could include regulatory risks, reputational risks, or even environmental risks. Then there's fundamental analysis. This involves looking at key financial indicators such as earnings, cash flow, and debt levels. It's about understanding the intrinsic value of an investment and comparing it to its current market price. But remember, due diligence is not a one-time thing. It's an ongoing process that continues even after the investment has been made. Market conditions change, businesses evolve, and new risks may emerge. Regularly reviewing your investments and staying informed about changes in the market and industry is an essential part of due diligence. And finally, don't forget to seek professional advice. Financial advisors can provide valuable insights and help you navigate the complexities of the investment world. But remember, even with professional advice, it's important to do your own research and make informed decisions. Proper due diligence is the key to successful investing. It's about more than just making money. It's about making smart, informed decisions that align with your investment goals and risk tolerance. So before you make your next investment, ask yourself, have you done your due diligence? It's time to take action. We've journeyed through the exciting landscape of investment strategies for 2024, exploring the importance of diversification beyond traditional assets. We've delved into the allure of alternative investments, from real estate crowdfunding to peer-to-peer lending platforms and commodities. We've looked at the promise of technological disruption, with sectors like artificial intelligence, biotechnology, renewable energy, and blockchain technology. We've also discussed the rise of ESG investing and the importance of aligning your investments with your values. We've shed light on the long-term trends shaping our global economy and the importance of due diligence in risk management. The financial world is changing rapidly, and to stay ahead, we must be proactive, explore, diversify, embrace the new, and consider the long-term trends. Your financial future isn't something to be left to chance. Your future is in your hands. Act now to secure your financial future in 2024 and beyond.